Well, unable to drive yesterday's rally into a second day, but hopefulness is out there of a credit crisis now in the rearview mirror that could bode well for the coming months. We will see. Joining me now to talk more about investing today, David Dahl is CEO of the Canley Trust Company. Mitch Stapley is Chief Fixed Income Officer at Fifth Third Asset Management, and Ron Insana, Managing Director of Insana Capital Partners and a CNBC contributor. Gentlemen, nice to have you on the program. Welcome.
Thanks, Maria.
David, let me kick it off with you. How would you characterize the markets today after what we've seen in the month of July and August?
Well, Maria, today was a pretty solid day, coming off the heels of yesterday, a very strong up day, some nice consolidation across the markets, a little bit of optimism looking forward. You know, next week we're going to have earnings season, but before we get to that, the jobs number coming up on Friday is probably the econ data point for the year.
And Mitch, what are you expecting from that employment report coming out on Friday? What kind of a rest of 07 are you expecting?
Well, we're expecting that number to be about 100,000, Maria. Hopefully the market, after we saw the decline with last month's job number, this number comes in and gives the market just a sense that things aren't quite as bad as what we saw from the last month. And if we can get a little bit more of that, I think the market's going to take a lot of comfort in that and can continue to work higher, especially if we get some decent earnings starting to come out next week.
Yeah, that's really the key, earnings and, of course, that jobs report. Ron, yesterday a lot of talk about, wow, you know, this market is going up, even though Citigroup, UBS comes out with poor earnings forecasts, and yet the market was up strongly. Do you think we've seen the worst?
You know, in selected areas, Maria, I'd say no, but I think, you know, what Wall Street may have been heartened by looking over some of the news from various banks and investment banks is, are they going to take all their lumps up front and give their you know, more arcane securities the most conservative valuation on their books, so there's a little upside rather than more downside to go as this credit cleanup continues. So that and I think maybe more hope that the Fed will continue to lower interest rates was certainly underpinning the markets, and you know, the jobs report, for all intents and purposes, in the near term will determine psychology about that.
I don't know, David, yesterday as the market was trading up, I was hearing all sorts of rumors that China was in the market. We had tons of foreign money coming into this market, buying stocks, looking for opportunities. Do you believe that? Do you buy it, that we're seeing actually foreign institutions coming in and trying to buy some bargains here?
Well, I know you've got a segment upcoming on sovereign investments. Whether it was China or whether it was here domestically, liquidity is going to be the key. I'll come back to what Ron just said. I mean, the T-bill rate, as we see it, is still a good 80 basis points beneath Fed funds. We think the Fed has plenty of room to continue their move to cut rates. That allows for liquidity into the marketplace. And we've been looking at a 45-day timetable that we've shared with your viewers before, dating back to mid-August, where we're going to have some hedge fund redemption liquidity that's hitting us here at the first part of this month. So, Maria, the liquidity is the key thing here in the coming weeks.
All right, we will leave it there. Good to have you on the program, gentlemen. Thanks so much.
Thanks, Maria.
We've got some breaking news.